myself Vaibhav. In today's session, we are seeing the subdued momentum prevailing in the equity segment. If we look at the Dow Jones Industrial Average today's chart, it has traded cautiously, mostly on the negative side. And as the US session has got underway, we saw top sector moves. First, it sharply went lower. Now it is regaining the lost ground, and it will be interesting to see how things unfold in the today's session. As far as the technical stand at the moment, I think the bearishness is likely to prevail, and we will try to figure out the optimum levels to look for fresh trading opportunities in today's session. If we look at the data docket for the day, there was not much data coming in the US segment, and even for the other countries, no major releases were scheduled for the day, so that was almost blank. And on the business optimism index, we saw the decline happening, and now this is the lowest reading in last 7 months for the month of December. And this is showing the heavy toll that has been inflicted on the small businesses as coronavirus restrictions have been in force, and as a result of that, the segment of the economy which are harder hit have been these small businesses, and that is being reflected in this data. Now let's move on to the technical segment. First, we will cover the Dow Jones Industrial Average technical formation, and then we will also take a look on the gold, which is in an interesting situation. So let's start with the Dow Jones Industrial Average technical outlook. This is the daily time frame chart, and after climbing above the 31,000, it looks like that this rally is running out of steam, and this might be the time to look for some shorting opportunities, not from the medium to long term perspective, but purely from the scalping perspective. I think some sort of correction happening from the current levels can't be ruled out, and that's what we are waiting on in today's session. If we look in the medium to longer term, then the trend remains bullish, and if we see some sort of correction happening, then maybe after that we can again look for buying opportunities, unless and until there is a significant turnaround on the longer time horizon. We can continue to bet on the rise of the Dow Jones Industrial Average, but from a medium perspective, I think this might be the time where we rely on the technical parameters like regression curve and the pivot point series, and look for making some gains, though of pretty sharp kind, where we will have to try to look for optimizing the entry and exit points. And to that extent, we can take the help of this first resistance of this month's pivot point series. And if we see the price action so far in the day, we have seen the Dow Jones Industrial Average hovering close to this first resistance, and we saw this decline, but now, as I said, the momentum is again turning little bullish, and it will be interesting to see how these hour ends. But on the whole, I feel that the day's high can be utilized as a stop loss, and unless and until there is a fresh breakout on the upper side, we can continue to trade with the bearish stance, and in the due course of time, the resistance is likely to push the Dow Jones Industrial Average lower, and then in the short term, we can expect the decline to go till at least 30,500. That's not far away, only 2 percentage points. So even from the bullish traders perspective, those who are long from the longer term, I think they will also see that such kind of development might indeed unfold, and if that happens, I think we will be in good position to capitalize on this trade. And if we look at the regression curve here, the price action is now shifting to the lower band after having been in bullish stance, and if this remains the case, then in due course of time we can expect the regression curve to flatten a bit, and that will be adding more technical indicators confirmation to look for some scalping opportunities. So if we want to optimize the entry and exit point, I think any entry point closer to this confluence zone of 50 and 100 SMA should be good enough. That is 31,000 price area, and as I said, the stop loss is going to be fairly sharp. The stop loss can be kept just little above the daily high, which is there around 31,130, and for that stop loss, the risk will work out around half a percentage point or even less than that if we are looking for the shorting opportunities anywhere closer to the 31,000 zone. And as I said, with that kind of risk, we can look for at least 1 is to 2 risk reward ratio, and that means we will have to target for the correction to extend below these immediate swing low. This swing low which was formed in yesterday's session, and then if things do go our way, we can expect the decline to deepen even below the 200 SMA, which is there around 30,700, and then the next target, which is going to be closer to this consolidation phase lows, and the 30,500 is going to be the our target for this trade, and the risk reward ratio is just above 1 is to 3, and that is going to fulfill our requirement of minimum risk reward ratio of 1 is to 2 as well. Now moving on to the gold's technical formation. The gold has declined sharply after getting closer to this prior swing high around 1960 USD per ounce, and even after this sharp decline, I think the momentum remains bearish, and even in today's session we are seeing fresh shorting after the consolidation, and I think in the US session we might see this decline pushing the gold lower towards US dollar 1820 or even below that. So this might be the time to look for fresh trading opportunities. In the gold, we have this key marker in form of the central pivot point at 1860 per ounce, and we have this consolidation phase high also. So for today's session, we can rely on these pivot point series as well as the regression curve. Both of these technical indicators are pointing to the bearishness prevailing in the gold, and as a result of that, it will be better for us to also remain on the short side and look for selling opportunities in the gold. And for that, we can rely on this consolidation phase high for of today's session. Anything above it can be considered the change of trend from the short-term perspective. So we can look for shorting opportunities closer to these 50 SMA. We had this sharp deceleration after the consolidation closer to US dollar 1860 per ounce, and if we are fortunate enough to get the entry anywhere closer to this level of US dollar 1850, that should be the optimum entry point, as we are going to aim for the price to even move below US dollar 1820, and with a risk of around 15 USD per ounce. That kind of reward is also worthwhile, as it is going to give us the risk reward ratio of 1 is to 2, and given the fact that bearishness is all over to be seen in the gold, we can be fairly hopeful of making money in this trade. But of course, the risk is always there in any trade, and for that we can go with the stop loss. We should always go with the stop loss, and that helps us in keeping the risk at a minimum while trying to look for the optimization of the trade with the aim of profit maximization. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument and one should be careful while using the information provided. Have a fabulous day ahead. Do subscribe to the Ducoscopy webinar channel to stay updated on the market developments. Goodbye.